Welcome to Get Serious. Excited to be reporting on this one today. So, yeah, I know a lot of folks are, always mentioning, hey, just compressed margins, difficult to find deals, even finding, 60, 70 cents on the dollar, hard enough to find qualified deals, let alone properties that are half of conservative 2x margin. But we're still finding those. Uh, you know, Definitely tougher to find, but that's what we're still tracking on. We've built a sizable business with great margins by focusing on those deals. And here's another case study, not fully closed yet, but it's basically a done deal. So this was a deal in Illinois, rural property, and the buy price was just under 60 grand, 20 plus acre property. So the purchase price per acre, I want to say, was a little shy of three grand an acre, maybe close to like 2.75, something like that. So ideally, we would want to be getting an exit of like 5.5 ish, 5,500 per acre, roughly. And it was just seemingly a distressed property sale. Again, it's all those same usual suspects. When you can find folks who are in the midst of an airship situation, or some other type of financial difficulty, or family transition, whatever. Like, those still tend to be the best sellers to work with. And in this case, there was a mortgage on the property. I think they bought it a few years ago, had plans to move there, and just fell through. And it was a decently cleared property. It could be farmland, but wasn't actively farmed. Could even have some hunting land in the back of the property as well. And the comp situation was interesting. It seemed to point in the direction that we could get roughly 5,500 per acre, but significant variance, and there wasn't a tremendous amount of comps being available within that market. We had to expand out our search radius pretty significantly, 10-ish some odd miles. And, I really don't like using sold comps in this market prior to, early April of 2025. It wasn't, it was encouraging enough, but it wasn't like a slam dunk that we were gonna for sure get 2x margin on this. And talking with a local realtor who is very informative, has done a lot of deals in the area, and he's like, yeah. And that's the thing too. I talk a lot more about trying to do more deals in the Midwest and the Northeast part of the country, because that just tends to be performing better more recently compared to more of the typical land flipping states in the South and the West. But in this particular area of Illinois, and a lot of, kind of statistical analysis of the housing market, like, it is one of, if not the top performing state in the country in terms of price appreciation. The realtor is like, yeah, this has been a rough year for land, at least in that particular area, which again is always a key reminder. Real estate is hyper local. You have to go zip code by zip code, street by street, in order to figure out the right value. Bottom up data is always going to be better than top down. Nevertheless, the macro indicators seem to be positive there, but again, the bottom up was not really matching, and the realtor's like, hey, he thought 5-ish K per acre probably would be more reliable for a conservative estimate. It's possible we could be sitting on the land for a while, maybe closer to 4,500 per acre. and to me, it's always like downside, downside, downside scenario. Okay, we're buying just a little shy of 3K per acre. Is there any chance we'd lose money on this deal, accounting for, commission, closing costs, etc.? And there really didn't seem to be a case there. There was one comp that sold earlier this year for 3K per acre, but it really seemed to be a distressed sale. It went pending within 2 days. Uh, had pretty poor road frontage. It had an old house that needed foundation work and a mobile home on it. So like it was a bit more of a unique situation. It's much more wooded than the property that we were looking at. So it was tough to put stock into that one as much compared to a number of other comps that seemed to be bumping the price a bit higher. So that one was a bit of an outlier, but nevertheless, even though that was like the comp with the lowest price per acre on it, like it was still a bit higher than our buy price. So like that gave us some extra downside protection there. So, we went back to the originator who brought us the deal and 57, 57.5 purchase price here. Like if we could get this closer to 50K, maybe 55, like it would make us feel a lot better about this one. Cause like the market and talking to the realtor, really grilling him on it, it just felt like we were a bit off when we were considering the conservatives. Like, maybe we could get the 55, possibly. And this was before he visited it. Actually, when he went to go visit, he's like, yeah, I think this is more of a premium property. We probably can get the 55. So that was more encouraging. And ultimately, we did decide to do that deal. Because again, we thought it was downside protected enough and that we were able to rearrange the terms a bit more to, in our opinion, give us a little bit more protection for working through this deal. And there had already been a problem with it before, like title was taking a while, and another funder had backed out of the deal because they got into a capital crunch or something like that. So, there were a couple things behind the scenes that were a little bit trickier that didn't really affect the pricing as much, but, it came to us kind of suddenly and, relatively close timeline to work with to close. So, we had to adjust accordingly. And so we ended up purchasing the property and, again, there was a mortgage on the property. So seller walked away with like 1K in takeaway proceeds, after paying off the mortgage. So again, like seemingly a bit more of a distressed sale there. And we immediately listed over this last weekend, or maybe it was fully up on just Monday of this week, so like a couple days prior to when I'm recording this, and just immediately, like it's great when it works out this way. Like it's rare, but especially in today's market, but sometimes it does. And the marketing was great. The quality of the photos, excellent. But there was a buyer who owned like 400 acres of farmland right near the property. They wanted to start, or they made a initial cash offer verbally for 5K per acre, which was solid, but we had just listed it. Let's start feeling it out. Plus, there was like going to be another site visit scheduled that day, like same day that it was being listed, or actually it was the following day after that. This has been kind of a whirlwind back and forth with this deal. So you're like, okay, there's at least some initial attention on this one. Let's see what we can put together. That's always a great sign right off the bat. You're getting some activity there. And so for the K cash buyer, and they were like an ASAP close, like, hey, we can use same title company close in like, a week. It's a great thing to have in mind. To me, when I see those scenarios and where there's some initial activity and it's like freshly listed, then usually like the tactic is, hey, just meet in the middle somewhere. Like we were listed at 6K per acre, so most times it would be like, okay, meet at 55, maybe haggle a little bit more. But usually early on, when we're starting to get some initial activity and we're not sure how the market's going to pan out, I would anchor a bit higher. So it's like, okay, if he wants to close fast, like do 57.50 per acre, and we'd be willing to sign a contract for that. The offer or the buyer for that particular cash offer came back and they're like, okay, 54 is what we will offer on the property. to me, I was like, that's basically right there. It's right at the 2x number, especially if they can close quickly, especially in this market. Like, that's great. We're going to get a nice return on this property. But let's get a little more oomph out of it. Let's go back to them and say, hey, if they cover all closing expenses, we would take the deal. And so the broker went back and they offered to cover up to $3,000 worth of closing expenses, which should have covered everything, including the title policy, other related closing costs. I mean, we had our 6% of commission to cover, but that was going to be separate from the closing costs. Well, really, it would just be a credit. So like, up to 3,000. So that could even cover some of the commission outside of just raw closing costs, because I generally, when you get that on the contract, like, it's just going to be treated as a credit. So, it's helpful there. However, we did see that their offer came back at 118,000, which was a little shy of the exact acreage that our property was. So like, we didn't want to be shortchanged. It was like probably an extra $1,500. But I'm like, hey, first, there's no survey. They didn't require one, but we're going off county recorded acreage, which is just a little over 22 acres. So like, let's make sure we're not being shortchanged here. We want it exactly. If they offered 5,400 an acre, like, make sure we're getting the right amounts. That's something that, you just really want to be double checking here. Like, don't always be in such a rush to accept these initial offers, especially if you have some activity. Like, be willing to work and like look at the details and make sure that you're not leaving anything on the table. And I didn't really think it was anything nefarious or anything like that. It was just, they might have just been using a different number, but we're like, hey, we're going off the county acreage. This is what we want. And in the meantime, they said, hey, this offer expires at like 6 p.m. And this was earlier in the morning yesterday. And we knew that there was another site visit happening at 9 a.m. that day. And so like, okay, let's see if they're a serious buyer. And we, usually it's like, can be tricky if you're like, hey, we have a pending offer, for somebody who's just viewing the property, going to be serious or not. And, some folks are like, yeah, that's kind of a pressure tactic. Or if you're just lying, like, and then you don't have an offer on the table, like, people are going to figure that out quickly. But in this case, like, it's an honest assessment there. Like, we had a good offer that we liked, and if they don't choose to make an offer on the property, like, they're going to see that the property is going to go pending later that day. So, we had an honest bullet in the chamber there. So it's like, okay, are you going to make something happen here? And just ask for their highest and best. So we had the realtor go back, and he asked for highest and best for both, the cash offer $5,400 that we had, as well as the site visit, because it was like, okay, these sellers they're going to make a decision right away. It's clearly a hot property. And as we were waiting for the offer number 2 from the site visit, and they were very interested, they were like, yeah, we're going to send over a high offer within a few hours. We got the highest and best offer from the 400-acre neighbor for $5,750 per acre, which was what our initial counter was, which was over a 2x close on the deal compared to our original purchase PPA. And they would still cover $1,500 in seller closing costs. Still another great deal. So like, and especially if they could close in a week, like, maybe this other offer comes back higher. Let's see. But it's going to be hard pressed to pass this up. Plus, they already showed proof of funds. They had it all set to go. Like, they got all of that done immediately. And then the other offer did come back at 140,000. So a bit higher, roughly 12.5 grand higher. However, it was contingent on them selling a house of theirs, which they hadn't even listed yet. And they gave themselves a 30-day close period to, sell the house and move on, which, super tight to do. I mean, sometimes the housing market, could move that fast, but our broker's like, he thought the housing market was super slow in the area and would be surprised if they sell it within like 3 to 6 months. So we're like, even for a little extra funds there, do we really want to take a, highly contingent offer that would expire within 30 days, but like, we have an excellent 2x plus bird in hand, like cash offer. I mean, those are virtually always, we're going to take that. So, it wasn't even that much of a decision, but like, we did play it out. We weighed all the logic, called back the broker, like really confirmed, the route that we could take for either of those. And then ultimately, okay, yeah, we're signing for the 5750 per acre price. Already have it in the title company that closed the deal for us just last week, so it should be super quick and fast. And everything is indicating, yeah, these guys are going to close maybe potentially by next week, probably no longer than 2 weeks. So again, this is just an example how we went through our dispo negotiation strategy, especially if you can kind of create a bit of a bidding war, like bump the price as much as possible. Don't just immediately accept what's on your door. And, the key takeaway here is that X margin deals are still available. Are they always going to sell like immediately within a day, like crazy internal rate of return? But no, this is a rarity, but it's a nice win when they do happen. Knock on wood, it actually closes, but I have very little concern that it's not going to. So hopefully this is helpful and just showing you again what's possible within this business when you really stay focused on finding good deals, and there is margin to be found. So seriousland.capital for any of your funding needs. Again, $50K minimum purchase price. Land Daily Diligence Facebook group, Zero Cost Review Your Land Deals, and landpricer.ai for the most reliable land pricing tool on the market. I spent a whole bunch of time bug fixing earlier today, or rather pointing out bugs for our engineering team to fix. Super rigorous work on it. More tweaks needed for it, but man, is it getting close. So with that, subscribe and share. Talk to you all in a couple days. Bye.